For a private client, it depends on your liquidity profile. For example, I think the yield curve is very inverted at the moment. So short-term gilt yields actually is very attractive. And we're talking about for additional taxpayer gross equivalent yield of like near 9%, for example. And that's risk-free, by the way. You're guaranteed to get it in 2 years' time. And of course, I think more clients are actually asking about reinvestment risk because they're asking also you get this attractive yield in the near term. What about in the longer term? So I think we can structure the portfolio with gilts of various duration, and then we can bring that to a target duration.
2 points I would bring up: interest rates. They have been unpredictable in a sense in the UK. The other point, politics, which has not been smooth sailing as we've seen. There've been various different events that have rocked the gilt market. So how do we put those two potential challenges into the equation?
Yeah, so first of all, that's why at the moment we favor the shorter end of the yield curve. So there are loads of low coupon bonds that were issued previously, and now because you want the capital gain part to be bigger, so we prefer the lower coupon short-term gilts so that you maximize your tax benefit. And for the longer term maturity, we ultimately think we are getting close to the end of the hiking cycle. Maybe not too much for the Bank of England, but it's priced in. I mean, markets are pricing in very aggressive rate increases over the course of the next half year. So I think a lot is already reflected. I doubt we can get further aggressive
It's only risk-free if you hold to maturity as well.
Yeah, exactly.
So that was the other caveat I wanted to put in there.
Yes.
For investors who are looking at a shorter time frame as well, the oscillation we've seen ever since, let's say, last September in UK government paper looks set to continue in the short term, doesn't it?
Yeah, but that's why I think it depends on the liquidity profile. I think for, say, 1.5 to 2 years, that kind of maturity, I think it is doable. A lot of people are finding a place to park their cash in an attractive way. I think short-term gilt yields is a very attractive place for private investors in the UK.
And I hear what you're saying as well, because you're also pretty cautious on equities as well. I think you've got a slight underweight in this as well. But having said that, there are some equities in the UK space, and I fully appreciate that the yield you get from 2-year paper now is far in excess, for one of the first times in years, to the FTSE 100 yield, which is circa 3.9% as well. But there are stocks, for instance, and Karen and I have just been looking at it off camera this morning. Vodafone is currently trading on an 11% yield, which blows away your tax-adjusted 9% on your gilts.
Well, the gift gross equivalent yield, say 9%, is risk-free. Basically, you lend into the UK government and you can get your money back for sure. You know exactly what you're getting, which is par.
You're saying buying Vodafone, which is down 40-odd% in the last year, isn't quite as risk-free. I would agree with you on that.
Yeah, I think equity is another story. So we're currently not particularly risk-on, but I think there's a valuation story in the UK equity market, but we're not comfortable with that at the moment.
Yeah, and that's really interesting, Janet, as well, because look, the FTSE is unloved and it is potentially a value trap as well. And I'm sure a lot of your UK-based clients are asking you constantly, what is the entry level for the FTSE or indeed the individual stocks within it? What are you waiting for?
I think we are generally cautious on the global economic outlook. What we see is the PMIs confirmed our belief that the economic momentum will slow down. And I think we are late cycle, so interest rates are going to be high for longer. So the case for equity is not that compelling compared to bonds, particularly the gilts that we're talking about for our UK-based client, by the way, who are facing additional tax rates, for example. So I think it is really the case of there is an alternative now. And we are watching for, we're underway. Of course, there will be a moment when we'll move back to neutral or even overweight at some point, but not now.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.